Welcome back. You're watching your weekly dose of finance. Growing up is a time when one must face the harsh reality that everything has hidden costs. Putting money aside for a car, don't forget about insurance and registration fees. Purchasing online, taxes and shipping must be taken into account. Purchasing a house is no different, and the asking price is only the start of the process. To make the purchase of a home possible, first-time homebuyers require more funds in their bank account than simply the down payment. However, being caught off guard during escrow is always preferable to knowing about these hidden expenses and making plans for them. First-time homeowners who research their options are aware of the maximum amount of mortgage they can afford. Their debt-to-equity ratio has been computed, and they have chosen a loan with a down payment and monthly payments that they can manage. Due to the buyer's ability to focus only on properties within their price range, purchasing a property is now considerably simpler. Still, it might not have covered every possibility. Undoubtedly, having a sufficient down payment and a reasonable mortgage are essential budgetary components of buying a home. A mortgage may be the largest loan you have ever taken on, and you may have to save for the down payment, which typically takes 30 years to pay off. Although these are the largest expenses associated with purchasing a home, there are other fees as well. You will need cash for a number of other expenses, so if you use all of your savings for the down payment, you can find yourself in a tight spot when it comes to closing escrow. Here are some hidden costs of buying a home. Number 6. Earnest cash. Given the term earnest money, one may assume that the purpose of this deposit is to demonstrate to the vendor that you are sincere in your desire to purchase. Before you sign on the dotted line, you can be requested to pay this good faith money at the same time you make the offer. It bears similarities to a security deposit. A seller will know that you are considering a genuine relationship and are not simply playing about with their house if you pay earnest money. What is the amount of earnest money needed? The location of the house and the agreement you reach will determine the response. Earnest money can be a fixed sum, such as $1,000, or it can be between 1 and 5% of the purchase price of the house. You can always ask your realtor for help if you're unclear about the amount. This money serves as protection for the seller in the event that the contract collapses for reasons unrelated to a sale contingency. For instance, the buyer receives their earnest money back if the house fails the inspection. The seller often maintains the earnest money, though, if you decide to back out and submit an offer on another house. The earnest money will be applied to the purchase price if you decide to go ahead and buy the house. Number 5. Inspections. When you first become a homeowner, you don't want to have major problems that require expensive repairs. A first-time home buyer cannot afford to accept the risk of those actual hidden expenditures. For this reason, after making and having their offer accepted, the majority of first-time homebuyers pay for a home inspection. You choose a licensed home inspector and give him the money to check the house for problems with the structure, the appliances, or anything else. If repairs are needed at that point in the home buying process, you can still work out a payment plan with the seller for the portions of the repairs that will be needed. Prior to completing the transaction, the buyer has more negotiation leverage. Depending on where you buy, a home inspection may cost anywhere from $300 to $500 or even more. Although not required by law, inspections are absolutely essential. It would be unwise to take on the full expense of repairs for the new house, which may run into the hundreds or even tens of thousands of dollars. The drawback is that if the purchase goes through, you won't get your money back from the home inspection. Number 4. Home warranty. A newly built house that has never been occupied is probably equipped with brand new equipment that come with warranties. Older homes are unlikely to have appliances covered by current manufacturer warranties, which could result in expensive repairs or replacements. Purchasing a home warranty is one way for first-time homeowners to reduce their risk. Although they can cover repairs of kitchen appliances, plumbing, exhaust and sealant fans, furnaces, and even sump pumps, they typically cost several $100s annually. Before acquiring a house warranty policy, make sure you have a look at the fine print. Much is produced to sound better than it actually is. Number 3. Closing costs. What a catch-all phrase. Closing costs refers to the broad range of fees that are due at the conclusion of a real estate transaction. Numerous expenses exist, some more expensive than others. These include origination fees for mortgages, legal costs, prepaid taxes and homeowners association dues, title insurance, recording fees, surveys, and notary costs. Closing expenses differ between lenders as well as between markets. While certain expenses like recording fees are modest in and of themselves, others, like mortgage points, are substantial. When combined, the sum is not negligible. Aim for 2 to 5% of your home's worth. If that sounds reasonable, the difference for a $300,000 house is between $6,000 and $15,000. Closing costs might affect your budget by reducing the amount of cash you have available for other payments, so you should budget ahead of time. Although closing expenses are typically paid at the time the purchase closes, some buyers include them in the financing. That can help you save money at closing, but it will increase the amount of your mortgage. Number 2, taxes on real estate. Real estate and other types of property are subject to annual property taxes levied by the local government. The assessed value of the home and the land it is situated on determine how much a homeowner owes. Cities and counties determine their own tax rates. For local governments that mostly rely on property taxes to finance municipal initiatives like roads, schools, and law enforcement, these are significant taxes. Rates of property taxes differ significantly between states and even the entire nation. Before you sign on the dotted line, you should find out the tax rate on a potential home by speaking with your real estate agent. That way, you won't be surprised when closing time comes around and you find out that your first year's property taxes need to be placed into escrow, which is a sort of account that keeps funds for insurance and taxes. These escrow monies will be used by your lender to pay your real property taxes, or they will be added to your monthly mortgage payment. Property taxes are only due during the period that you own the house. Should the seller have paid the property tax in advance for a few months, you will need to pay back your prorated share of the tax to them at closing. It's crucial to remember that once you move in, the government may reevaluate the property and find it is worth more than you paid for it. The good news is that you have more equity than you initially believed if this occurs. The bad news is that you will receive an additional property tax charge from them. Number 1, insurance for homeowners. In addition to providing liability coverage in the event that someone is injured on your property, homeowners insurance also covers damage to your house. Similar to property taxes, the lender frequently pays the insurance company out of escrow for homeowners insurance. However, the money goes into your escrow account. You're still responsible for paying for the insurance even if you do not write the check. In the end, you'll pay your homeowner's insurance as well as your taxes, frequently by adding a monthly payment to your mortgage. How much then should you anticipate? Currently, the average yearly price for homeowners insurance on a $200,000 house with a $1,000 deductible and $300,000 liability coverage is $1,244. Numerous states have greater rates. That is merely an average. The average cost of homeowners insurance for the same home and level of coverage can triple in Florida due to hurricanes and other storms driving up insurance costs. Expect to pay $2,140 more per year than the national average for homeowners insurance in Oklahoma, the most costly state in the union. So are you ready for all these? Do tell us in the comment below and like, share, and subscribe to our channel. See you in another video. Thanks for watching.